Julia is at Bell Direct in Sydney, standing by for us now. Nice to talk, Julia. Very good morning to you. And we're looking at what to drive us today.
Carson, good morning. Well, we saw a pretty good week on the Australian share market last week with a gain of 1.5%, and it does look like it's going to be another good start to the week. We're seeing the SPI futures up by 23 points, and of course we saw that positive lead come through from the US on Friday with the Dow up by 0.6%. It does look like resources may lead our market. We saw oil prices up by more than 3% and base metal prices also increasing. So it should be a pretty good day for our resource companies, but it's going to be the financial sector which really takes the spotlight this week. We see Westpac report its results on Wednesday, and of course Westpac is the pick of most of the analysts in the banking sector because it's seen as low risk. So a close eye is going to be kept on its bad debts, whether they're rising and how fast they're rising, and also any tunes of capital raising through either underwriting the dividend or slashing the dividend. We also see the stress test results coming out this week. They were supposed to come out tonight in the US, but it does look like they've been pushed back to the 7th of May. So there's going to be a little bit of nervousness there. Today on our market, we see Macquarie Group come back online after its capital raising at $27 per share. That's compared to a $32 last traded price. So we're expecting to see those shares put the financial sector under pressure. And of course, tomorrow we have the Reserve Bank meeting in Australia. We are expecting to see interest rates in Australia remain on hold because, of course, we see the budget out on the 12th of May. So we'll probably see some stimulus there. But expect to see growth rates in Australia slashed by the Reserve Bank after those IMF growth forecasts earlier on in the last month.
You expect that the giddy gains for the A-dollar might be curtailed a little bit on the back of those projections that are coming out of the budget?
The Australian dollar has been doing pretty well of late, and that's really a reflection of investors willing to take more risk in the market. So commodity prices have been rising, equity markets have been doing fairly well, but the Australian dollar is going to remain quite sensitive to any interest rate as well as that budget. So that's going to be closely watched by the currency as well as the share markets on the 12th of May.
Julia, we've been talking this capital raising. We know that Illumina undertook this offer to Instos, right? It raised just on $734 million. It's now set to raise about $285 million in a retail offer, so no trade for them today.
Illumina is just one of a number of companies which are looking at capital raisings at the moment, and it is a trend that we're seeing in the market. It's not surprising given that we've seen the share market do quite well since the 9th of March. So the share market has been rising quite strongly. Also in the financial sector, we're seeing a little bit of interest in capital raisings ahead of perhaps that short selling ban being lifted at the end of the month. But one stock which is bucking the trend is Macquarie Media. And if we have a look at Macquarie Media, instead of doing capital raising, they've actually done the opposite. And they've done an off-market buyback. This should increase some of the financial metrics, so the earnings per share figure, the PE ratio, the return on equity. And instead of diluting shares, it has the opposite effect. And it really shows that management has confidence in the underlying company, as well as confidence that the shares are looking pretty cheap at the moment. So they did the buyback at $1.50. And if I actually bring up a chart of Macquarie Media, if we have a look, you actually have to go back to October last year before the shares traded at that price. So they did the buyback at a significant premium to the last traded price. We have seen Macquarie Media shares doing quite well. They're up 53% in the last quarter, and now they're looking at an on-market buyback as well. So expect to see these shares doing quite well today.
Well, let's just look at MQG then, and let's see how they are doing, because I can tell you they're not doing it all nicely.
Macquarie Group is expected to have a pretty difficult day, although it's unlikely that we're going to see the shares fall down to that $27 price, which the new shares were issued at. Some brokers are positive on this move by Macquarie, saying that they're in a much better place in terms of their balance sheet. It removes some of the confusion in the stock, and they should be okay going forward. But other brokers are quite negative because of the steep discount that we've seen. I don't have Macquarie shares up here, but if we have a look at the market map, this is the financial sector, and if I step to this side, you can see one big red mark there, and that's Macquarie Group. It's looking like it's down around about 8 to 10% at this stage, but really a red spot in that financial sector, which overall seems to be doing pretty well today.
It's off 8.69%, but keeping its head above the $30 a piece mark to the minute. Interesting view from Dow Jones Newswires. They're picking up on JP Morgan's assessment. They've raised their price target, but they've kept a neutral weighting on the stock, saying, of course, that increased competition in vanilla financial offerings, as we see a global synchronized de-risking, could place headwinds for Macquarie in terms of future growth.
We are seeing investors coming back to traditional products. So instead of the more complex, the derivative type products, we're seeing an increased demand for perhaps some index-based products. So we are seeing Macquarie's model a little bit under pressure, that investment banking model, but it does look like investors are preferring this more simpler models after all the turmoil that we've been through in the last couple of years due to the global financial crisis. But of course, it is a very difficult environment for banking stocks, banking companies at the moment, and a key event for that banking sector is really going to be those stress tests, which are out on Friday.
Orica has bounced 7% plus. Good H1 number. At least the market's cheering.
Orica has come out with its first half result, and if we have a look at the net profit number, it was a little bit below expectations, but net profit before items actually came in above expectations. So we saw an increase there, up 15% to 264 million. The consensus was around that 260 million mark. Now, this is a good result for Orica because one of the trends we've been seeing in the mining services industry is profit coming under pressure because a lot of companies are pulling back on their capital expenditure in terms of the resource sector. But Orica's mining services unit actually saw an increase of 18% to $319 million. So that's a huge positive. Now, some of that is on the back of increasing ammonium nitrate prices. They've also seen some pretty firm demand come through from gold as well as from coal as well. But they've been increasing efficiency as well as restructuring, and that has helped. Now, Orica has kept its full year targets before material items. Its shares doing pretty well in 2009 so far. Its shares were up 23% in the year to date before trading. Let me just bring up Orica's shares and see how they're doing today. And if we have a look at Orica's shares, you can see that we've seen a bounce today around that $10.50 mark. So a pretty good day for Orica.
What do you make briefly finally of their strategy about still eyeing smaller acquisitions despite the second half being what they've described as tough?
Well, Orica is one of these companies whose balance sheets is in a pretty good place at the moment. So they're looking at some smaller acquisitions, even though it is a pretty tough time for resource companies. But if you are cashed up, this is the time to be buying because we know that things are looking pretty cheap at the moment. So Orica, on the good side of the equation, it has a strong balance sheet. It's looking at some small acquisitions and picking up some cheap assets before the market turns back and starts to improve.
Julia, as always, it's a pleasure. Appreciate your time and your insights. We'll talk soon.
Thanks, Carson.
All right. Julia Lee from Bell Direct. Bit of breaking news, Rock Oil as well. Last few moments telling the market that it has not received any takeover.